Well, welcome to this morning's edition of Pre-Market Pulse, 30th of June 2025. Headline being stocks climb to record highs as investors climb the wall of woe. So essentially the S&P 500 closed at record highs on Friday night. Rebounded sort of mid-session. There was an intraday drop after President Trump ended trade talks with Canada, reigniting fears of a trade war. But as per usual lately, the stock market basically ignored that completely and just had got on with its business. It was really strengthened the banks overall and a few of the retailers on the back of Nike's very good results that pushed it higher. As you can see here, quite an incredible week. We're just 80 days out of that where we hit bear market territory in the stock indexes in the States. And we're coming into end of financial year here in Australia, and we're looking at the best result for a financial year since we came out of COVID, which is quite incredible considering all that's going on. We've still got the US debt higher, we still haven't got trade deals done, and we've obviously had a number of geopolitical situations. But, you know, the indexes speak for themselves. They seem to be bulletproof and unbeatable here for the moment. Most of those indices for the week closing up nearly 4%. Obviously, the Nikkei really bounced quite hard. The ASX lagging a little bit. We probably need to see some, some progress out of China for the Aussie market to start playing catch up, because obviously the banks here are very stretched. But what we need is the mining companies to start making up a little bit of ground. As you can see, sort of big strength overall. The Mag 7 were up. Tesla was down slightly after having a fairly decent week. Nike, or Nike, however you want to say it, basically had an outstanding result. They're going to move some manufacturing back from China to the US. They're going to start getting high-profile athletes again, go back to their old business model, which everyone loves. Or has loved in the past, basically they rallied around about 15% on the back of the new plan. So obviously the market took that very, very well. You can see the small bits of red there. Palantir down 9%, although coming off a record high there. Probably wouldn't take that with a grain of salt. That's trading at a forward PE of well over 200. So we obviously, it's fairly volatile in that stock. EIE, and the healthcare sector really, copping the brunt again. The healthcare sector probably having one of its worst quarters, half years in a very, very long time. You would expect to start to see value in that sector at some stage, but at the moment, investors don't want to hear about defensive stocks. So unfortunately, you won't start to see any buying there until later. So look at the commodities and energy. Copper, actually pretty surprising. Copper or platinum's been on a really good run. Made a new record high and then got belted about 3% into the close. So fairly volatile there. But copper is just grinding higher. It's around about that 510, 520 mark. Edging towards record highs yet again. The price action has been really positive. Gold suffered a little bit, obviously, as people start to go a bit more risk on, and crude prices really helping the equity market head a little bit higher as well, because obviously that's going to nip inflation in the bud in the eyes of investors. So US dollar, I think, has got a little bit to play to do with this rally. It continues to drift off, obviously making US stocks cheaper for foreign investors. It'll be, we will wait to see what happens here. I can't see this rally being remotely delayed, particularly in Australia. As you can see on the company front, we've got very little this week. It will be a fairly quiet week as the US tries to get out for their last big holiday of the summer, 4th of July holiday. It's probably one of, if not the most observed holidays outside of Christmas and Thanksgiving. Very rare move, and I haven't seen this very often in my 30-odd years. Manufacturing payrolls has been pulled back to Thursday night. They won't release it on Friday night. It's nearly always the first Friday of the month. It's very rare that they ever move that figure. That's going to be the big deal. We have seen a little bit of weakness in some of the employment numbers and the leading indicators. We've also seen a little bit of weakness in the consumer as well. So those numbers are very, very strange at the moment. Inflation and employment particularly throwing a lot of conflicting signals. The Bureau of Labour and Statistics, which is the same as our ABS in Australia, obviously being fairly defunded and having to do a lot of work and reduce their sample sizes. So the numbers don't seem to add up. So I would think that leading into the 4th of July holiday, we'll probably see limited reaction out of that number potentially. A few manufacturing numbers this week in China, which is a massive one for the Australian market. Obviously in the US on Tuesday night, a couple of central bank speakers as well later. For the Bank of Japan speaks, they have got very difficult job in front of them. They probably need to move rates higher, but they obviously don't want to. Bank of England, Bailey speaking as well, and Powell speaking. It's all on Tuesday evening. We've got inflation expectations here, very small number, but retail sales on Wednesday should be fairly important as well. So as far as what's ahead today for the Australian market, final day of the financial year, fund managers will be thanking their absolute lucky stars that we managed to have one of the better financial years in recent memory. And who would have thought 80 days ago that when we hit bear market territory in those US indexes, we'd be anywhere near here, let alone busting up to the high side. I would say they will throw the kitchen sink at this today. I would expect this market to be up way more than what people think. We're only up 5 points in the SPY leading in. I think this thing could just open and just grind higher all day as fund managers try to lock in that fairly decent financial year so they can spread about it and spruik those results for the next 12 months. Well, that wraps it up. Apologies, as you can hear with my voice. I was a little bit sick last week. We're back on track now, and we'll have this every morning going forward. Thank you very much. Have a good day.
General advice, warning and disclaimer. Opinions, thoughts, research, recommendations and content presented are general advice only. They do not take into account your specific circumstances. Please consult a financial professional before making any investment decisions. For further information on our disclaimers and general advice, please see our website and our PDS.